Stock markets are selling off as they continue to digest the Fed minutes, with the tech sector taking the brunt of this. Bond yields are on the rise and cryptocurrencies are falling. Is gold and silver set for a breakout and a rally to an all-time high? For all this and more, I'm joined this week on Gold Core TV by Chris Vermeulen of the TechnicalTraders.com. And remember, if you want to see more interviews with thought leaders and industry experts in financial markets, subscribe to Gold Core TV and hit the notification bell now. And if you want to learn more about how to buy, sell, and store physical gold and silver, log on to goldcore.com, your precious metals experts. Chris Vermeulen, welcome back to Gold Core TV.
Hey, thanks for having me, Dave.
Now, we're seeing a bit of volatility and sell-off in markets, particularly in stock markets. Maybe we could have a look at some of the major US indices, jump straight into it and see what it is that the charts are suggesting and telling you on the major stock markets.
Sure, yeah. We definitely have lots of volatility. Fear is definitely picking up in this market. We got the daily chart of the S&P 500 here, if you can see that. And can you see that chart?
I can indeed, yes.
Okay, great. So yeah, we can see the recent sell-off we've had in the S&P 500. If we zoom in, we had the Fed come out, a couple of weeks ago and created this huge rally. So it's kind of a rally based on news, and then it digested for about a week, and now we're seeing that unwind. And we've got, talk about yields going up, rate hikes. We've got Omicron, we've got the tech issues. So we're seeing it kind of unwind. So you got a news-based pop, and now that's fizzling out. And really, we are still making a series of higher lows. We're still making a series of higher highs. So we are still in an uptrend in terms of the market here, but it's definitely got people spooked. If we take a look at the VIX, which measures the average investor's fear, it's a big spike today, up over 20%. So we're definitely seeing a big pop in fear. And that's typically what we want to see during a market or a cycle low. We usually see the VIX spike during all of these sharp sell-offs. And when you zoom back on the market overall, we typically come down and we pierce through the 50-day. We tag the blue line here several times. And we just had a multi-month consolidation, and we're kind of back down in that consolidation phase. But the market hopefully will get some traction here and start to move higher. But the talk and the mentality of yields and potentially 4 rate hikes, I think Goldman Sachs is thinking this year, is definitely putting some pressure on the market. We've got technology. They're very heavy with debt. And if there's a small interest rate rise, it's going to take the wind out of their sails a bit. And of course, everything in the stock market is leveraged. So a small move in rates is a pretty big move in terms of debt and in the stock market prices. So we are seeing this kind of correction in the market, but we need to see if we get traction here over the next 2 or 3 days, or else we could start to see something much deeper in the stock market.
And talking about the tech sector, if we were to have a look at the NASDAQ and charts on the NASDAQ, because we're seeing a decent rotation out of technology stocks. And that seems to having a greater impact on the NASDAQ than on S&P.
For sure. It's very obviously tech heavy. It's taken the most of the downside selling pressure. And, it's very similar. You get a big market correction, you get a panic wave in the market. We see big volume, which is what we're seeing. Very similar to kind of over here, where you see a big market correction back February, March of last year. And then it kind of resets. So we're down into this level. I typically like to follow the S&P 500 for the overall market bias to see what's going on there, the overall trend. So the NASDAQ definitely has made a lower low here. It's oversold, and we need to see what kind of rebound it's going to get. And if we were to look at some of the other markets, like if we take a look at the Dow real quick, the Dow's still holding up fairly well, still above the 50-day, really just settling into a previous high. And if we look at the Russell 2000, it's definitely under some pressure here, back down to this significant low.
Very strong resistance there at that level, isn't there?
Yeah, very strong support level.
Excuse me, yes.
And hopefully it will find some support here, but it's been tagged many, many times.
Yeah.
And I mean, if it breaks this level, it could be lights out for the small cap stocks, and it'll be an early warning sign that the major stock index could be putting in a major top early this year.
Interesting. And on the major indexes, on the NASDAQ and on the S&P and on the Dow, any particular levels then that you're looking at that is either going to confirm this is going to be a bit deeper, or that we could see a retracement too?
I mean, generally, If you start to break two previous lows, I like to always see an impulse move, which an impulse move would be you break two previous lows. So here's the first low, here's the second low. If this market comes down and breaks both of those levels, so there'll be a level, whoops, across there, a level right across here. When it can break through two support levels, you know it's got quite a bit of downward momentum. Usually you're going to see some type of wave of panic selling. And then how it reacts after this is going to be the important part. The S&P 500, the Dow is far from this. So we would need to see if it's going to build some kind of low volume kind of bear flag before it continues a second leg down. But the NASDAQ is a different story, as you were just pointing there. It's already broken these lows. So now we need to see how the NASDAQ is going to play out. Now that it's broken this significant low, we're going to have to see how this kind of eventually plays out. If it stalls and can't get back above this blue line, then we could very easily see a bigger move come down, maybe down to this low over here or potentially lower. But overall, the market is definitely, on the cusp of trying to top out. We've got cycles at the end of January putting in potentially a major top in the stock market. Now, we don't trade based off those, but the stock market is definitely showing signs of weakness. We've got small caps on the verge of breaking down, big technology, rates going up, inflation problems. I mean, all these things are coming together, and it might be that perfect storm for the stock market to stall out this year. So we're still very early in that stage. I don't even want to talk about a bear market really, because that's a long ways away. We're still in a major uptrend, and the markets are just oversold at this point. A lot of it's based on news, potentially unwinding of the stimulus plan in July. So there is a lot of news coming out that's definitely putting headwind into this market, and we need to see how everyone's going to react. We're still really only the first week, into the year of trading. So there's a lot of emotions going on, a lot of rebalancing for the year, and that's usually what happens. So we'll see how this week plays out. But this is a pretty strong week in the market. Hopefully, we're going to see the stocks rebound or hold their ground here.
And if we were to look at bonds, and maybe it's something that the 10-year Treasury bond, obviously it's digesting the news out of the Fed and the narrative that is ensuing. Yeah. What are we thinking? Because we're at a kind of key level on the yield on the 10-year.
10-year yield. And if we took a look at it, we fizzled out when the COVID initially hit. We saw yields crash, and now they're coming up and they form this very large cup and handle formation. And this is typically a fairly bullish pattern. You come down, it forms a cup, and then you have this giant handle pattern here. And if we see yields start to break and run, we could see a pretty big move, but they really are at trading at resistance right now. Very significant resistance level. The next one will be up here at this previous high over here, this blue line. So we'll see if yields start to stall out. I feel like a lot of this move here is people reacting to the Fed trimming back on stimulus, potentially the yields, the interest rates going up. And so we're kind of having this news-based run, and we'll see how things react over the next week or two. I think a lot of this recent move is very just emotional. It's news-based, and generally the underlying trend will come back into play. News will pull the market against the trend, but then the underlying will come back in and take control eventually once that wave of selling or buying, whichever happens to be based on that news, kind of dissipates. So we're kind of at those thresholds. Is this market going to break down in general, like the stock market? Are yields going to pop? Or has that move just happened and now we're in this digestion phase and we see everything revert to the mean, which would be yields fade back down a bit, stocks go back up and hit new highs. And we just have to really play it out kind of one bar at a time.
Now, one market that has been correcting is in the crypto side of things and Bitcoin, which had a stellar couple of years, but we're in a bit of a sell-off now over the last couple of weeks since hitting a new all-time high up in the high 60,000s. We're now down to touching on a support level around 40,000. Any ideas what we can expect there?
Yeah, the trend here is clearly down. It's making a series of lower highs, lower lows. It's definitely at a support level. You can see just the cursor along here. We've got major lows here. We've got consolidation here. We've got highs and then a breakdown level here. So it's definitely at a really major turning point. It's also a whole number. 40,000 is a whole number. 50,000 is a whole number. Typically, you find support or resistance at these levels. And so 40,000 is trying to hold. If it breaks 40,000, we're probably very quickly going right back down to 30,000. and it'll go and test this major low. And if it breaks 30,000, the next downside is around like 16,000. So I'm not saying it's going to go down there, but we're definitely seeing a lot of these markets, including Bitcoin, has been moving a lot more in sync with the stock market. It's starting to become almost like the herd trade, where when money's bullish, it goes into Bitcoin and stocks. When it's bearish, it sells off of Bitcoin, sells out of stocks. We've seen that a little bit more and more on a daily basis, but definitely Bitcoin's still not 100% related to the stock market. But if the stock market finds a bottom here, I think we're going to see Bitcoin continue to move up and bounce with the stock market as well.
I'm not too sure if you have a chart available on this, but I'd be keen to get your thoughts on what's going on in the oil market before we have a look at precious metals.
Sure, yeah. If we take a look at crude, it's down about 0.25% today. It's had a really nice run. I mean, it was primed and ready actually to go up to about 88, 89. It had put in a perfect ABC correction, was just about to rally, and then we had Omicron hit, and it just clobbered crude oil. Of course, everyone was talking about countries closing down, airlines, dramatically halting or stopping, and of course that killed it. So now we're kind of clawing its way back up. It has got a very strong uptrend here in place again, and I think it's going to go all the way up. The next target here is about 84 to the upside. So hopefully we're going to see 84. If it gets up here, it'll probably consolidate for a bit. And we still actually have a target at 88 to 89. So there's still quite a bit of upside potential in crude oil going forward. The economy, I mean, as much as a lot of people like to say it's a bad economy, I mean, the economy really is booming. A lot of businesses are doing exceptionally well. Travel's picked back up, and crude oil is usually a really good sign of how the economy is doing. So it's rebounded with a vengeance, and it's heading up. And I think it's still going up to 84 before it runs into some more overhead resistance.
And finally, then, if we take a look at precious metals, we have a look at gold and silver. We look at gold first.
Sure. Gold really hasn't changed much. I mean, it's been in a downtrend for a year. You can see here just since last June, last May, it's really just chopped around sideways. Very kind of noisy, ugly chart. Constantly makes a series of higher highs and then lower lows. Not really a whole lot of insight unless you look at it from the big picture. If we were to step back to like the weekly chart and take a look, you can see here it's in a big bull flag pattern still, consolidating and just trading sideways. So eventually, if this bull flag pattern plays out, we should eventually see it rally up. And based on the previous rally in this pullback, we're still looking at 2,600, 2,700 for gold when this pattern plays out. But again, if we were to step back one more time frame, go back to the monthly chart, you can see here we're in this huge bull flag pattern. The next one will be way up here. But we need to make sure that it breaks and runs to the upside. Right now, it is kind of neutral. It's in no man's land. It could very easily go back down and go dormant for a long time, or it could break out and have a big run. This type of bull flag pattern is actually very similar to something just like this, where we had a big market correction in gold, like a 30% collapse. Well, we've kind of seen that type of thing happen. We've had this big collapse with COVID, and now it's trying to stabilize. And as it comes up and breaks through this 2000, it's going to be something like this right over here, where we could go into this huge second phase. So I'm really excited about precious metals going forward, but they're still trading sideways. And if we take a look at silver, it's fairly similar in terms of the pattern. Silver obviously had a huge peak back in 2011 that kind of dwarfs the recent one. But when we zoom in, you can see we've had a big rally. It's been trading sideways in this choppy pattern. It is hanging by a thread near these lows. And if it was to break down, we could see silver have a pretty quick collapse. If we were to just look at the most recent price action for silver, we're looking at a downside of around pretty much $18 an ounce if this is to break down and we see panic selling in the stock market. So the problem is, if we see the stock market break down and sell off, typically precious metals are going to sell off with them. When there's big panic and everyone is liquidating, metals get pulled down. So we'll have to just see what the metals do. But again, gold has been trading sideways, building a base. Silver's down at support, trying to build a base. So are precious metal mining stocks. And we just need to see how this market's going to unfold. We're just in these big holding patterns. These are monthly charts, so these patterns take a long time to play out. And if we were to take a look at the daily chart of silver, for example, you can see here a huge sell-off. started to put in a high volatility bottom pattern. We were talking with subscribers and we were looking for some knee-jerk reaction rally, and we ended up getting that, but now it ran into resistance and it's selling off again. So right now it is in a very short-term downtrend. You got a big red bar, couple inside days, which is like a bear flag, a big down bar, couple inside days. It is still pointing to come back down to potentially test these lows. But I do think precious metals will start to firm up here later in this year. I think they're going to become actually a market leader. But until they break out of these patterns, you got to be really cautious because they really are still sideways, and in a downtrend more or less.
So if we see stocks continuing to sell off, we might see precious metals follow them down in the short term before hopefully potentially a rally later on in the year as that correlation breaks down.
I think it'll be a great opportunity for an investor. Anyone, collecting physical metals, I think it'll be a great opportunity. I think it'll be like a washout low. It'll be some type of panic sell-off, and it'll probably be like a knee-jerk reaction bounce, a lot like we saw back over here in 2020. It's just a collapse in price, and then it comes right on back up. So that's kind of what I'm looking for. In a way, it would be a good opportunity, but it'll definitely, put a lot of people into a panic mode if it does sell off like that.
And just before we wrap up, Chris, maybe you'd just like to remind everybody again about how they can learn more about what it is that you do and what it is that you offer.
Sure. Yeah. At the technicaltraders.com, I provide a morning analysis, kind of similar to what you and I do. I focus more on the intraday and the current daily chart. We figure out where things are going. We manage our trades. I focus on trading ETFs, and we're looking to play, cycles in the market that last anywhere from 20 to 60 days long. And we play the indexes, bonds, precious metals, whatever the hot sectors are that are moving. And more or less in the morning reports, I walk through all these things. It's highly educational, kind of teach technical analysis as we run through the charts. Eventually, you become a pretty sophisticated technical analyst on your own, and you get to ride the coattails of the team and I as we trade the markets. It's a pretty straightforward and educational service.
What I'll do is I'm going to put a link as usual in the show notes in the description below this video. So anybody that is interested, I can highly recommend Chris's service. Just click on those links and you'll get to Chris's page and can sign up. But for now, Chris Vermeulen, thanks for joining us on Gold Core TV.
Hey, thanks for having me. Always a pleasure.
Thanks for watching. And if you enjoyed this video, you'll enjoy these recent interviews that I've done with some industry experts. And remember, if you want to see more interviews with industry experts and thought leaders in financial markets, subscribe to Gold Core TV and hit the notification bell now. And if you want to learn more about how to buy, sell, and store physical gold and silver, log on to goldcore.com, your precious metals experts.